So FPX is a Vancouver-based company. We trade on the TSX Venture Exchange. Excuse me. We're focused on the advancement of the Baptiste nickel project located in central BC. We think in the fullness of time, this will be viewed as the most important sort of new nickel deposit in Canada since the discovery of Voisey's Bay. The next major milestone, as John mentioned, is the production of a preliminary feasibility study, which we expect by September of this year, and thereafter moving into feasibility study and getting into the environmental assessment process. We believe this project can be delivering nickel units to the market by the end of this decade. The PEA that we completed on this project in 2020 showed it would be one of the largest nickel mines in the world, producing at one of the lowest costs and having one of the lowest carbon footprints. And ultimately, we think this project can be, a model for modern project development in the mining industry, one that is really founded on a sort of a partnership model with local communities, First Nations, one that gains government support and ultimately sits in the hands of a much larger company than ours, and that would be the ultimate exit point for shareholders. On the point of government support, I think it's important to note we were the only junior mining company that was invited to attend the launch of the federal government's critical minerals strategy in December of last year. We're also recently invited to attend a trade mission to Japan with Minister Wilkinson. And I think that speaks, to some of the unique insights we're getting into some of the funding opportunities for projects like ours from the federal government here going forward. As I mentioned, the project is located in BC. We ultimately think these nickel units will be delivered into the electric vehicle battery market. The icons here are showing the battery plants that are either currently operational or planned to be constructed in the years to come. These battery plants will increase in number. The unique opportunity with Baptiste, owing to its mineralization, which I'll get into in a moment, is the ability to develop a fully integrated nickel operation where we can produce, we can take nickel in ore to nickel in concentrate to nickel in battery grade nickel sulfate without having to deal with a smelting intermediate step. That really speaks to a few things. One, it will drive very low cost of nickel production for that market, very low carbon footprint due to the reduction in the number of transport stages associated with that, with multiple stages of processing and refining. And finally, also speaking to traceability, which is very important for battery makers and car makers globally. We're located about 80 kilometers just to the west of Mount Milligan. Milligan is a very similar scale operation to what we have in mind, has been in production now for about 10 years. Large open pit bulk tonnage operation, large mill, large tailings facility. Similarly, the Blackwater project, which is about 200 kilometers south of us, is awaiting its final permits from both the province and the federal government here in the first quarter of 2023. We think that's going to send a very strong signal as to the permittability of these large-scale projects in this province. Importantly, our project sits on the traditional unceded territories of the Klassen and Binche-Wuten First Nations. We have agreements in place with them, and we work hard every day to earn their trust and work towards collaboration towards responsible development of the project. Baptiste sits within a larger footprint project. Overall, it's called Descartes. You see Baptiste here in the foreground. Almost all of the exploration work to date has been really focused on delineating Baptiste as one of the largest nickel deposits in the world. We have also done drilling at a new target in recent times over the last 2 field seasons at the Van target. The quick takeaway on Van is that it appears to have the potential to be just as large, if not larger, and higher grade than Baptiste. But for the time being, the company's focus will really remain on Baptiste and moving it forward to that construction decision as quickly as possible. The nickel mineralization here is unique, and it really speaks, I think, to a bit of the disconnect we see in our value versus peers in the market. This is not a sulfide and it's not a laterite. The nickel is hosted in a mineral called awaroite. Awaroite forms in an ultramafic setting that is depleted in sulfur, and that low volume or that low quantity of concentration of sulfur is of paramount importance. The absence of sulfur is what caused for the nickel to be, to be formed as this nickel iron alloy as opposed to being formed as a sulfide mineral. Awaroite is highly magnetic and therefore has significant metallurgical advantages over sulfide minerals, sulfide nickel minerals. I believe the market for a long time has viewed the metallurgical aspect of this project as being one that is inherently risky. This is the first awarenite deposit of this scale to be discovered anywhere in the world. And the mining industry is often the race to be second, never the race to be first. We are the first to be advancing a project of this nature, and we take the kind of that view around the metallurgical risk very seriously. That has culminated recently with the completion of a pilot plant demonstration of the flow sheet, which I'll show you in a moment. That pilot plant work has been very confirmatory of all the bench scale work that we've done in recent years. And we've gone from the point, I think, where we have to sort of defend the metallurgical performance of this mineral and can actually play offense and really highlight that there are distinct advantages here for lower cost, higher recoveries than what is typical in some of the low grade ultramafic nickel sulfide deposits that are seen as our peers in Canada. At the risk of getting too far down the technical rabbit hole, I think it is important to talk through the flow sheet here to look at how we can take a high volume of relatively low-grade nickel, about 0.22% nickel, and quickly upgrade that using that magnetic characteristic of the mineral, so that through 2 stages of magnetic separation of the process feed, stage 1 and stage 2, we can reject about 95% of the feed mass to tailings. And what remains is an extremely nickel-rich magnetic concentrate, 6,000 tons per day of 2.5% nickel. That is a world-class feed then into a flotation, standard flotation cells to then produce a very high-grade nickel concentrate where the nickel content is in excess of 60%. What do we do with that product? Again, the absence of sulfur here is critical. Sulfur in nickel sulfide concentrates typically necessitates a smelting stage, and that is where mining companies typically, suffer a tremendous value loss when they have to sell nickel concentrates to third-party smelters. In our case, we have the ability, given the low sulfur content and the low content of other deleterious elements, to bypass smelting altogether and to go directly into the high-value end uses, whether in the stainless steel market or in the battery market. And in both cases, that ability to bypass the smelting stage yields to significantly higher payabilities, and that speaks to the bottom line of the project economics. The holy grail of nickel production currently is the production of nickel sulfate, or NiSO4. Again, this may be a bit small on the screen here for you all to see. The main takeaway is to know that the production of nickel sulfate is a very complicated affair, whether you're dealing with laterite ore from places like Indonesia or sulfide ore from places like Sudbury or Russia. There are many stages of processing and refining. Oftentimes, this involves transport between many different facilities, between many different transnational borders. In our case, we can control this entire supply chain from nickel in the ground to nickel in concentrate to nickel and battery grade sulfate right here in the province of British Columbia. That's going to entail, again, lower cost and lower carbon footprint. Just as important as where these projects sit on the cost curve today, I think, is where they sit on the carbon curve. This is a key theme, I think, for all the battery metals, but I think it's also going to be applied to gold projects, et cetera, going forward. The dirty secret of the electric vehicle industry is that it's a highly carbon intensive business to produce batteries. You can see that the nickel that comes out of places like Indonesia and the Philippines, they emit upwards of 70 tons of CO2 for every ton of nickel produced. We, again, in Canada, have the great benefit of leveraging the hydroelectric infrastructure in provinces like BC, and our carbon emissions will be very low, among the lowest in the world at 2.4 tons of CO2. So we spend a lot of time talking to battery companies, to car companies. This element is a standout element that really piques their interest in this project. And it really is interesting. As a relatively small company, $100 million market cap, there's not a week that goes by that we don't have update meetings with some of the largest car makers in the world about their interest in gaining access to these nickel units going forward. A couple of slides just to show how we stand out, I think, in the peer group of other nickel projects out there. There are not a lot of advanced stage nickel projects outside of Indonesia or in the Western world. This screen just about covers all of them. And these projects are ranked on the basis of their mine life on the horizontal axis and operating costs on the vertical axis. We sit in a very good part of that curve, all things being equal. You want to be low cost, long mine life, and our Baptiste project sits very nicely there, particularly in the context of the other large low-grade bulk tonnage nickel deposits out there that could be of interest to major mining companies. Another way to look at these projects is to measure them by what we call the strategic value index. This is the ratio of mine life to payback. So very simple formula, take the mine life of the project, divide it by the after-tax payback. And this is a way to really show how economic the project is over the long term in a way that is maybe not quite well captured by NPV and the discounting effects that are implied by NPV. I'd invite you all to use this metric going forward as a way to evaluate different projects going forward. It's a very powerful tool, and you will find that the best projects in the world tend to have the highest ratio in this regard. Notwithstanding that, we are trading at a major discount to our net present value, currently trading at about a 0.05 multiple. The project NPV in the 2020 PEA was about 2 billion Canadian. Our current market cap's around 100 million Canadian. Why is that? It really is down to the novelty of the deposit type that we have here. But those who are careful readers of our news releases, in particular the recent news release around the pilot scale demonstration of the flow sheet, I think we'll see an opportunity to kind of exploit that disconnect, to their own financial benefit here going forward. A couple things to note about our capital structure. One, very significant management ownership. It's just under 18%. And importantly, we just took on a new strategic investor. John mentioned this earlier, that now owns 9.95% of the stock. They made that investment in the fourth quarter of last year at about a 27% premium to our share price at the time. That investor, we're not yet in a position to be able to identify that counterparty. However, I think there may be opportunities here in the not too distant future for that identity to be revealed. And when that identity is revealed, I think you will probably have, if you've taken advantage of looking at the stock ahead of time, that could be something that pays off for you. Thanks very much for your time.